A corporation has been around for a long time. You could go in and set up a corporate structure at your local state level for, I don't know, probably over 100 years. And it, of course, whether you're setting up an S corporation or a C corporation, it's an actual corporation. You're setting it up as a corporation. Limited liability companies came along in actually it came out in 1977 in the state of Wyoming. And it was intended to be a legal tool that offered a whole lot more flexibility than just, say, limited partnerships all by themselves or corporations all by themselves. Limited liability companies were intended to be able to have the person, when they set it up, literally tax it as anything they want to. You could set up an LLC and tax it as a sole proprietorship, or you can set it up and tax it as a partnership or a limited partnership. You could set it up and tax it as a corporation. So that's why the limited liability company can be, in and of itself, taxed as a corporation. When you set up an LLC, you can tell your accountant to tax it as a C corporation. As far as the IRS is concerned, it's a C corporation. You can set up an LLC and tax it as a sole proprietorship if you want to. It's a sole proprietorship. So LLCs just gave us more flexibility to set up these various taxing structures by setting up one tool and then deciding how you want it to be structured. For our purposes, most of the time we're going to be setting up an LLC, and we're either going to be literally asking you to be taxed as a limited partnership for lawsuit protection, or we're going to be having it taxed specifically as a corporation to run the business and get the tax benefits as any corporation would normally do.